This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
Nothing to shout about. Why Yahoo's earnings outlook may be giving investors reason for concern.
Rising home prices, falling inventory, bidding wars. Sound like a housing bubble? We'll tell you why that may not be the case.
And the business of hot. Who wins and who loses as the worst heat wave of the summer grips the Northeast. We have all that and more tonight on Nightly Business Report for Tuesday, July 16th.
Good evening, everybody. I'm Bill Griffith in for Tyler Matheson along with Susie Garrett. There may not be a lot of celebrating at Yahoo this evening. It is the one-year anniversary of Marissa Mayer taking over the top job at the internet giant. And after the close, the company posted a beat on second quarter earnings. However, they did miss on revenues, and the big concern turned out to be the warning for the third quarter. Seema Modi has more from the NASDAQ tonight. Seema?
Bill, well, Yahoo's second quarter revenue came in short of expectations at $1.07 billion, and that's primarily due to a drop in its display advertising revenue. Yahoo's earnings, though, of 35 cents a share beat street expectations by 5 cents. Yahoo's third quarter outlook disappointing the street. That's when we saw shares move to the downside after hours. BGC Partners analyst Colin Gillis telling me that Yahoo is still facing challenges as its core business in search is struggling. Now, a couple points made on Yahoo's conference call. On the Tumblr acquisition, Yahoo says the combination of Tumblr and Yahoo is expected to grow Yahoo's audience to more than 1 billion monthly visitors. Marissa Mayer says, I'm, quote, encouraged by Yahoo's performance in the second quarter. Our business saw continued stability and we launched more products than before. Shares of Yahoo are down after hours. However, Yahoo has gained roughly 70% since Marissa Mayer took the job as CEO of Yahoo 1 year back. Bill, back to you.
All right, Seema Modi, thanks very much.
On Wall Street today, a mixed bag of earnings pulled down stocks, ending 3 days in a row of record highs in the Dow and the S&P 500. Volume was also light, with investors in a sort of holding pattern, waiting to hear comments from Federal Reserve Chairman Ben Bernanke. He's on Capitol Hill tomorrow and then again on Thursday, speaking to lawmakers on the state of the economy. Ahead of all that, the blue chip Dow lost 32 points, the Nasdaq was down about 9, and the S&P off by 6 points.
And shares of CocaCola were the biggest decliners in the Dow today, falling nearly 2% after reporting lower quarterly profits last quarter. Coke earned 63 cents a share. That matched expectations, but sales and the volume of cases shipped were both below estimates. Coke CEO is laying a lot of the blame for the slowing soda sales over the last 3 months on wet and cool spring weather.
Shares of investment bank Goldman Sachs were also down, even though it reported profits doubled last quarter. It benefited from the rising stock market as fees from stock market underwriting and trading rose sharply. Goldman earned $3.70 a share. That was well above estimates of $2.82. Revenue surged 30%, also beating consensus. And CEO Lloyd Blankfein said improving economic conditions drove client activity. But today, investors focused on new banking regulations that will limit how much of its own money the firm can risk, raising concerns that Goldman won't be able to repeat the gains that it made in that quarter.
Earnings at Johnson & Johnson more than doubled in the quarter, but that stock was unchanged today. The company earned $1.48 a share. That was 9 cents more than estimates. Revenues also came in better than expected, up 8.5% to $17.9 billion, thanks to strong sales of new drugs for arthritis, psoriasis, and prostate cancer. Shares didn't budge in the news, but so far this year, that stock has soared by 30%.
And our guest tonight has a buy rating on Johnson & Johnson stock. He's Matthew Dodds, healthcare analyst at Citigroup. And Matthew, thanks for joining us tonight.
Thank you for having me.
All right, so you have a buy on the stock. It's up 30%. I mean, what else is going to drive this stock higher? Is it time to take profits?
I don't think so. The reason I say that is because the last 4 quarters, they've actually shown improving trends, and the beat this quarter was the biggest in several quarters. You could go back even 3-4 years. And what's driving it is their pharmaceutical business. And I think what's being underappreciated is that division has much higher margins than the corporate average. So you're seeing the whole P&L upshift with that group outperforming as it is.
The underperformers, the consumer division and the medical devices, do you expect those to play catch up, or can pharmaceuticals still drive the engine?
So I don't think they're going to play catch up in the near term. The device business is facing a lot of issues with utilization, healthcare pressure, much more germane to med tech. And then consumer, it's recovering from some FDA issues, but the profitability is still well below where it was, and that'll take time to fix. So my bet here is that the pharmaceutical business still drives the bus the next at least 2 quarters, if not longer.
So those pharmaceutical issues, we know that there were a lot of recalls about Tylenol and Motrin. Not to worry about those anymore?
Well, it looks like they're behind them. They have a consent decree with the FDA. The important thing about consumers, it's only 12% of their profit. So it doesn't really drive the earnings. And even if it comes back to its old levels, it's still well below MD&D and pharma. So those two businesses are much more important to the overall picture, and pharma being the most important.
It's an international concern. What about the business overseas, the currency fluctuations and the impact that can have on its earnings down the road? What's your forecast there?
So they raised guidance, and about 4 cents was taken out of the guidance for foreign exchange for the back half of the year. So not that big. We're talking about a number in the 540-ish, 547 range. And then the other thing is they had a very strong quarter in brick. They grew 19%, which was consistent with the first quarter. I think that's important because there's been a lot of concerns that some of those markets might be slowing, but at least for healthcare and J&J as a barometer, it didn't appear that way.
All right, so you're giving a very upbeat and positive forecast for this company. Anything that concerns you, any wild card?
Well, the valuation is a premium. It went from a discount to a premium with this big run. So you do have to bet that the company's pharmaceutical business deserves a good-sized premium to its peers to make the math work. So I would say that's the most important thing. There is some concern now about China with getting more aggressive with the pharma companies. Again, I think that's manageable for J&J's size. So there are things out there, but I feel that it's their best recent trend in a long time.
Quickly, near all-time highs here at $90. How much higher can this stock go, do you think?
I went up to 101 today. I'm going for the 3 digits.
Wow.
Okay, new target. Good thing you asked that, Bill. Yeah. Last important question. Matthew Dodds, healthcare analyst at Citigroup. Thanks a lot.
Thanks for having me.
Well, get ready for more pain at the pump, unfortunately. The government's Energy Information Administration said today that gasoline prices could soon rise an additional 15 cents a gallon because of the recent spike in crude oil costs. The EIA says that gas has already risen 15 cents a gallon in just the past week and is now averaging $3.64 a gallon nationwide.
Top Senate lawmakers unveiled a plan today to bolster the finances of the Federal Housing Administration. It's facing huge losses this year from defaults on mortgages that it guaranteed during the housing crisis. The new bipartisan draft bill would help stabilize the U.S. market by strengthening the finances of the FHA, which insures about 1/3 of all U.S. mortgages. Now, just last week, House Republicans released their fix-it proposal for overhauling the FHA.
And there was some good news in the housing market today, though. Home builder sentiment rose by 6 points this month, reaching the highest level we've seen in 7.5 years. Builders are feeling more confident about new home sales despite rising mortgage rates.
But those rising rates, along with skyrocketing home prices and a shrinking supply of homes for sale, are raising concerns that we may not have learned from the mistakes of the past. And as Diana Olick reports, there are new worries about another housing bubble.
The nation's home builders are more confident than they've been in 7 years. Supplies of existing homes for sale are near record lows, and real estate agents are reporting bidding wars at open houses. Home prices are up over 12% from where they were just a year ago. Sounds like the perfect recipe for another housing bubble. Or is it?
No, we're not in another housing bubble. There's plenty of room to grow before we get into irrational levels.
Fleming points to still near record high affordability. Home prices are up, but still well off their peaks of the housing bubble. Mortgage rates are higher, but still historically low. He says prices would have to rise an additional 45%, or rates would have to hit 6.75% for a bubble to be possible.
It's not out of the realm of possibility a year or so from now. A lot of it will depend upon how mortgage rates respond to changes in the quantitative easing program that the Fed is doing and how much further appreciation we get.
Rising mortgage rates should help temper the big home price spikes, especially among the home builders. They've been jacking up prices recently in order to offset higher costs for land, labor, and materials.
There have been pretty widespread reporting of price increases from the builders. And normally that would tend to curb the market, but with the big decrease that we saw in mortgage rates over the past few years, that really has allowed the builder to pass those prices on to the consumer without much notice.
The recent rise in mortgage rates has taken away a good chunk of purchasing power for those on the margin of home ownership, perhaps for first-time buyers, but not for the majority of home buyers. A bigger issue continues to be negative equity, potential move-up buyers stuck in place because they owe more than their homes are worth. But rising home prices are slowly unlocking that equity and potentially opening the doors to more supply and more home sales. For Nightly Business Report, I'm Diana Olick in Washington.
Still ahead, shopping without ever leaving your couch. Believe it or not, you can now buy a product that you see on television, and all you need is your remote control. We'll explain. But first, a look at how the international markets finished the day. You don't need a weatherman to tell you how hot it is in much of the country right now. Just 1 year after the worst Midwest drought in more than half a century, forecasts are now calling for another dry and hot summer. And that prediction for increased heat and reduced rainfall sent corn and soybean prices soaring today.
Well, this week's heat wave, with its triple-digit temperatures, is affecting millions of Americans. And it's changing the daily routines for commuters, shoppers, workers, just about everyone. And in any heat wave, some businesses come out on the losing end, while others come out way ahead. So who's benefiting from the business of all this heat? Hampton Pearson has our story.
From Boston to Washington, D.C., the hottest week of the summer has major utility companies predicting near-record air conditioning use and fuel demand from gas-fired electricity, but no plans for discounts on customer utility bills. Make no mistake about it, when a heat wave hits, there are winners and losers. Dining al fresco, even along the Potomac River or any waterfront, not a high priority. Ditto for vendors operating those popular curbside food trucks.
A lot of people, they stay inside when it's hot. They don't want to go outside and stand in line at a food truck, stand in the hot sun. It's just not, it's just not the best thing to do for them, especially when it gets with a heat index over 100, they want to stay inside.
And if you're in the ice cream or frozen yogurt business, this is your time.
Actually, because I have a ice cream shop and we sell a lot of cold drinks, like smoothies and everything, which is good for me when it's hot.
Coca-Cola, the world's largest beverage maker, blamed cool weather worldwide for less consumption of its soft drinks and shrinking profits. Nothing like a good heat wave to help boost the bottom line.
There's a very strong correlation between, weather and Coke's volume. So, if Coke's job is to market to people when they're thirsty, and if they're not thirsty because it's raining all the time, you're not going to have volume.
As shoppers beat the heat at the mall, retailers are recovering from a cold spring and record rainfall in many parts of the country in June. Heat waves, however, do end eventually. For Nightly Business Report, I'm Hampton Pearson in Washington.
A downgrade for Ford in tonight's market focus. Goldman Sachs took Ford off of its conviction buy list, pointing to a lack of near-term catalyst to drive gains. Investors seem to agree. Ford dropped more than 3%. It closed at $16.60 on heavy volume. Meanwhile, CSX reported profits and revenues above expectations after the bell tonight, saying that growth in merchandise and intermodal volumes more than offset declines in coal shipments. CSX says that it expects profit growth of 10 to 15% through 2015 off this year's base. Shares of CSX had risen more than 1% in anticipation of that report and then popped in after-hours trade. CSX closed at $24.64.
A shot in the arm for investors in HCA Holdings. This hospital operator issued a strong preview of its second quarter based on increased hospital admissions. It reports results on August 1st. Now, HCA's news spread to other hospital operators like Tenet Healthcare. HCA gained nearly 4.5% in heavy trading today, closing at $38.86, and Tenet up almost 3.5%. Takeover talk boosted Onyx Pharmaceuticals today. Investors are speculating the company will go for a deal with Amgen at more than $130 a share. Onyx rejected a $120 offer 2 weeks ago. And now Dow Jones reports Amgen and Pfizer are among firms interested in buying Onyx for its blood cancer treatment. Shares of Onyx rose more than 1% to $132.71 and have surged 50% in the past 2 weeks. And profits at discount broker Charles Schwab dropped 7% as expenses climbed on higher costs. The firm reported 250,000 new brokerage accounts over the last 3 months. The stock, though, fell more than 3% on heavy volume to close at $21 a share, but it's up 45% year to date.
Reports say that Dell's long-expected shareholder vote on the future of that company, which has been slated to take place on Thursday, may now be delayed. Founder Michael Dell, along with private equity backers Silver Lake Partners, is looking to take that computer maker private for $24.4 billion. But some of Dell's biggest shareholders, like T. Rowe Price and BlackRock, have come out saying they would vote against that offer, saying it undervalues the company. They say shareholders should instead consider a competing proposal from activist investor Carl Icahn that offers more money per share and would still keep part of the company publicly traded.
Smartphone wars are heating up. AT&T will now let customers upgrade their phones every year. This is instead of the customary 2 years, as long as they pay full price for those devices in monthly installments with no interest charges. It's called the AT&T Next plan. It comes on the heels of a similar option from a smaller rival, T-Mobile, which allows customers to upgrade every 6 months.
And if you think you need a smartphone or a tablet or even a desktop computer to do some shopping, you're wrong now. Shop TV is here, allowing viewers who own certain smart TV sets to click on a product that they see in a show and buy it. Julia Borston joins us now with more on how Shop TV works, who's using it, who's making money from it, all the story. Julia?
Thanks, Bill. That's right. Up until now, if you wanted to buy a product you saw on a TV show, you had to find it online or go buy it in a store. But now, with your remote control, you could buy home furnishings or clothing from a TV show right there on your TV set, thanks to a new application unveiled today. A new app for internet-connected TVs called Shop TV aims to transform the way you shop. Here's how it works. Viewers launch the app, which is pre-installed in 2012 and 2013 Samsung smart TVs. So when they're watching, say, NBC's The Biggest Loser, a banner pops up to indicate a product's for sale. Clicking a button on the remote allows consumers to buy items, including clothing or home furnishings, from the Shop TV store. They pay with PayPal or a credit card, and Shop TV shares the revenue with the TV networks.
This is unprecedented, and certainly unprecedented in the last decade in terms of consumers actually using their televisions and their living rooms as truly connected experiences.
The app was created by startup Delivery Agent, which specializes in entertainment-related e-commerce and is backed by Intel Capital and Samsung Ventures.
We've been a behind-the-scenes player, right, where we've been powering commerce on behalf of all the networks and behalf of all the studios since 2005. Now we're bringing this to the mainstream.
But analysts are skeptical about TV commerce. QVC and Home Shopping Network have already launched Pay by Remote, and it's never really taken off. Plus, Shop TV faces a range of rivals. American Express announced TV commerce partnerships with Fox and NBC Universal last year, allowing consumers to buy items from shows like Fox's New Girl through apps and online.
You have Amazon, you have eBay, all of these e-commerce companies tend to have apps of their own. And so you're essentially competing with those guys who are essentially behemoths in the space.
Shop TV boasts that it doesn't require a device other than the remote control, but some say that's not an advantage.
They're not accustomed to shopping with a particular remote. And so I think there would probably need to be some sort of huge marketing push.
Shop TV does have the advantage of scale, offering several 100,000 products from about 500 top shows, thanks to partnerships with 55 networks, including CBS, NBC, Fox, HBO, and Bravo. Right now, the app only works with products within TV shows, but the company behind it says that it plans to expand to TV commercials as well. So pretty soon, you'll be able to click your remote control to buy a product you see in an ad. Bill?
Maybe they like my tie, I don't know. How big could this market become? What's the projection there?
Well, there are different estimates, and it's kind of hard to tell because it doesn't exist yet. But one of the analysts we spoke to compared it to the home shopping networks, saying that the markets for like Home Shopping Network and QVC, that's roughly an $8.5 billion business. Now, obviously, the business becomes much larger if you expand it to also looking at the infomercial business. But for now, we're definitely looking at the billions of dollars if people do indeed want to buy things with their remote control.
Oh, well, I'm definitely going to buy things, Julia, with my remote control. I'm just wondering what kinds of products will people be able to buy? Is it mostly clothing? Is it TVs, gadgets? What kinds of stuff?
Well, clothing, as you can imagine, you see a shirt you like in a
Absolutely.
TV show, you want to buy that shirt that the TV star is wearing. So it's clothing, it's accessories, it's home furnishings, but it's also things like beauty products. So if you see someone applying a certain type of blush in the bathroom in a scene in a TV show, that might be up for sale as well. But of course, this all has to be coordinated both by the app and the TV network to figure out which products they can go ahead and sell.
It's an exciting new trend. Thanks a lot, Julia. And coming up, it's not easy being an electronics retailer in this day and age, with big box retailers and Amazon dominating the scene. But Radio Shack is fighting back with a brand new strategy. We'll look at if it's enough to stay competitive. But first, let's get a check on how commodities, treasuries, and currencies performed today. The Senate has just confirmed Richard Cordray as director of the Consumer Financial Protection Bureau by a vote of 66 to 34. Cordray's nomination had been held up by Republican opposition for more than a year while he served as acting director.
Mixed bag of news for Chrysler today. For the first time ever, its Dodge Ram 1500 pickup was Consumer Reports magazine's top pick for full-size trucks. That beat out the Toyota Tundra and Ford's F-150, which is the top-selling vehicle in the U.S. But that good news comes the same day the automaker is recalling nearly 46,000 of those same Ram pickups from model years 2012 and 2013 to fix a faulty electronic stability control system that may not turn on when the engine starts.
When you can buy just about any kind of electronic gadget or accessory online, it's getting harder and harder for a small space retailer like Radio Shack to stay competitive. So the chain is changing things up, but trying to lure back more customers lost to big box stores and the internet. Will it work? Courtney Reagan gets some answers.
Any company that's been around for more than 90 years needs a little updating now and then. But with the proliferation of big box retailers like Walmart and Best Buy and the convenience of Amazon, some think it's too late for Radio Shack. Since 1999, Radio Shack has fallen from a company valued at more than $15 billion to just over $300 million today. CEO Joe Magnacca acknowledges Radio Shack has work to do to bring back a customer lost to competition.
I was brought in to actually help transform this business, and the team that I'm putting in place is really focused on rebuilding Radio Shack. We're in a great space relative to technology, and it's a brand that really in the past has kind of lost its way, and our job is to really reinvigorate the brand and to rebuild confidence in Radio Shack and bring back those lost generations of folks.
This store in New York City is one of Radio Shack's new concept locations. It's brighter and less cluttered, and while Radio Shack has decreased the number of products available for sale, it says that the ones that are available are more relevant to today's shopper.
Actually, I was just looking for an item that I couldn't find in Best Buys and other PC riches, and I just found it. I'm very content. I just purchased it.
I find it more set up more easily for the average customer who's not so technologically savvy as myself.
We really do like the new prototype. It's just much more exciting, much more inviting. They're de-emphasizing mobile phones. They're emphasizing some of the different brands that they have in their store, like Samsung, like Apple. But at the end of the day, I'm just not sure if it's going to be enough.
One of Radio Shack's strengths is its ubiquity. With 4,300 stores around the country, there's one in seemingly every neighborhood. But presence alone isn't enough to win back shoppers who have moved on. For Nightly Business Report, I'm Courtney Reagan in New York City.
More than 500,000 checks are in the mail today. They are headed for people who bought so-called toning shoes from Skechers USA. hoping to lose weight and strengthen tone of their lower body. The trouble is, they didn't work that way. The Federal Trade Commission says the sneaker maker made unfounded claims, calling it deceptive advertising. Following a settlement reached last year, $40 million in payouts are now being sent to unhappy customers.
A new study gives credence to the phrase, use it or lose it. The French government's health research agency says that retiring at a later age reduces the chances of getting Alzheimer's or other types of dementia. The study found that for each additional year that you keep on working, the risk goes down more than 3%.
And finally tonight, U.S. News and World Report is out with its annual list of the nation's best hospitals. At number 3, the Mayo Clinic in Rochester, Minnesota. In second place, last year's winner, that's Boston's Mass General. And 1 year after being knocked out of the top spot after a more than 2-decade-long run, Baltimore's Johns Hopkins Hospital is number 1 again. But, you know, I don't think you can go wrong with any of those three right there.
Absolutely right, Bill. And for more on the nation's best hospitals, log on to our website, nbr.com. And that's it for us, Nightly Business Report for this July, what is it, 16th?
The 16th it is, yes.
I'm Susie Garrett. Thanks for watching.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.
Nightly Business Report has been brought to you by sailing through the heart of historic cities and landscapes on a river. You get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with a Nightly Business Report news brief. Yahoo posted a beat on second quarter earnings while missing on revenue. The bigger concern, the company is warning its revenue for the current quarter will be below Wall Street estimates. After hours on the news, the stock fell. Johnson & Johnson, meanwhile, and Goldman Sachs both saw profits double last quarter, but CocaCola earnings fell, blaming slower sales on cooler spring weather. On Wall Street, stocks ended lower on mixed earnings news and anticipation over Federal Reserve Chairman Ben Bernanke's testimony on the economy before Congress tomorrow. The Dow lost 32 points, the Nasdaq was down 9, and the S&P was off by 6 points. And consumer prices inched up 0.5% in June, mostly on rising prices at the pump. Be sure to tune into Nightly Business Report right here on your public television station.